Good morning, everyone, and welcome to another edition of Bleeding Crypto's 15-minute Bitcoin update. Today is Tuesday, July 16th, 6:54 a.m. local time. I hope you're having a good day, morning, or afternoon, depending on where you are in the world. Let me start off by giving you my disclaimer. I am not a financial advisor. This is not financial advice. I am wrong 99.9% of the time. So if you use real money and you follow me, you have a 99.9% chance of losing it all, you dumbass. So understand that this is for entertainment purposes only. This is just fantasy paper trading. All right, guys. I have to protect myself legally, so I have to give you that disclaimer. This way, it's ironclad disclaimer. If you lose any money, that's on your ass, not on me. All right, so let's go ahead and continue from where we left off a couple of days ago. I did not give you guys a market update yesterday. I was extremely busy. And as you can see here, the last time that we had the video, we were below the bottom of this channel. And I don't know if you recall, I think it would be a good idea, if you have some time, just go to the last market update that I have posted on YouTube. Adjust the speed to 1.5x. It'll take you about 5 minutes to go through, maybe 7 minutes to go through it. It's a really good learning experience to be able to listen to what I said prior to it happening and what are the steps that I mentioned and what are the steps that actually played out. I'm going to give you a quick rundown. I told you guys that if we hit the bottom of this channel here, I'm going to go down to the lower time frames and I'm going to try to identify acceptance into this range here. And what I mean by acceptance is we're going to see a back test from above the channel instead of a rejection from the underside of that. So if you go down here to the hourly time frame and there's that line, look at what we did. We had the up thrust candle. Look at exactly where we back tested that bull break. 1, 2, 3 back test. And off she went. Now, go back up to our daily time frame. I was only expecting a move to the 50 EMA. That's it. Just to the 50 EMA, and then we'll see what happened. But look what we got. We got a really, really nice upthrust candle. However, this move began, I think I mentioned it before, what I call scam pump weekend, SPW, meaning that Asia will run the market, and then Monday morning, New York comes in, and 90% of the time that Asia runs on a weekend, New York will smack it down. But did they? No. They kept on running it. Then on Monday, which is after New York close, becomes Tuesday for Asia, they didn't smack it down. They pretty much just kept it, and London session gave us this smackdown here. So on the London session here is when we started that drop. Now, does this mean that we're going to now retrace this massive move that we did? I would like to think so, because when I view markets as an analyst, what I do is that I look for market structure. I look for proper market structure, and that is identified very easily in any time frame by a series of on a downtrend. We've got a high, a low, we got a lower, we got a lower high, lower low, so forth and so on. Lower high, lower low. Then when we reverse, we put a low, we put a high, we put a higher low, a higher high, and then when things start to come in and start to show us signs that exhaustion is coming in, we start putting in double tops. Then we start shifting our narrative to the downside. And when we had our drop, if you look at the daily time frame, we didn't have a proper market structure. We just slammed down. We put in this very weak, shallow, lower high, and then we put in a lower low. And the reason I call this a weak, shallow, lower high is because normally we can calculate what those lower highs are by putting a fib here to there, measuring where that lower high, and look how shallow we got. We didn't put a really proper a lower high. So we had a really big drawdown with not a lot of structure. However, we put a really nice structure that led us here. We put a double bottom. We put a W. If you look at the lower time frames, like for instance the 4-hour time frames, you can see that W. Really nice W. It struggled a little bit here, came back down, and then it just completed it and then some. The completion of that W would have been about right here, which is where we kind of stopped. We found resistance, then we kept on going. Now, the question is, do we keep on going? And my answer is always going to be the same. I don't know. Let's validate. Let's find the validations for a continuation or an invalidation for a continuation, or you can look at it the other way, a validation to the retracement. So the first thing that I'm going to do when I look at areas like this, actually, I'm going to go ahead and turn off the I'm going to turn off the EMAs for right now. We don't need the EMAs. So let me just drawings indicators here. First thing I'm going to do is just put a simple fib, swing high to swing low. So I got the swing high here. We got the swing low right here. Let me get rid of this. And then I'm going to go and put our, all right. So, and actually, the proper way of doing it is we go with a continuation rule first, okay? A continuation rule is a good rule to utilize for a lower high. When we look for a lower high, we really don't want to break the 0.50 fib. We can, but generally when we respect this continuation rule, we get a nice bounce. One of the key things for me to strengthen my validation or strengthen my invalidation is going to be confluence. So now I start building a case for which metric is going to hit that has the largest area, the largest concentration of validations. And let me explain to you what I mean by that. Here's the bottom of that channel. This is the horizontal channel. Ignore this one for now, okay? Ignore that one. I still want to keep it because it's still valid, but just ignore it for now. Look at the 0.50. I mean, it is exactly where that line is. A lot of people look at this and think, oh, that's a coincidence. Well, if they haven't followed me long enough, you're going to think that automatically. But when you follow me enough, you're going to notice how well measured everything is. And this is why I love technical analysis. It's based on math, and there's a rule in math. Math doesn't lie. So I really do enjoy, we're using math with human emotions. So we're going to have a margin of error because this is greed and fear. So when you throw in human emotion into the mix, there's, it's going to mess shit up. But for the most part, it's pretty well dialed in, and we can utilize it to a certain extent, the validations and invalidations. And that's what I use for the probability factor. I'm not going to be right every time, but if we continue to use the same rules, over time, you'll have more wins than losses. Now, if we come back in here, we now have a 0.50, the bottom of the channel, great area for the bulls to hold. It gives us a nice W flag breakout scenario. My next area for the breakout would be right here, would be the medium line of the horizontal channel. Now, I like using harmonic patterns. Now, what I'm going to do next is going to be a little premature because we don't know where this is going to go, but let's just assume we do stop here at the bottom of the channel. It provides support just like it did for the past 4 months, aside from a couple of deviations that we had, and it matches with the 0.50, and we get that continuation bounce. So what I like to do is just put a quick harmonic pattern, from the bottom here to this move here. Let me just take that arrow out. I was using it for another example on one of my videos this morning. Boom. Okay, then we're going to clone that. And again, we're just assuming that we go to the bottom here. And the reason I'm doing this because I told you I want to find confluence. Now, again, this is 5 steps more than what I should be doing because we could invalidate this and go lower, but just for right now, just for the sake of giving you a little bit of education. If we do bounce, my next target is the medium line, coincides a little less than the harmonic. Generally, I like to see a smaller margin of error than such a larger margin of error. But if we were to follow the harmonic pattern, let's just snap a line real quick on here. Can we find support and resistance at the end of this harmonic pattern? I don't know. Let's look left. Look at that. Perfect support, perfect resistance. Not as great, but very close to it. Perfect resistance, perfect support. You see what I'm getting to? everything is measured pretty well. But again, that's assuming that we bounce from here, because that's where you take the takeoff. Wherever this lands, it could be here, it could be here. That's where you do the takeoff. That's why I said I'm getting a little bit ahead of myself. But I just want to give you an example of what I look for when I do apply the harmonic patterns, when they become valid, and that's when we know when our higher low is. Okay, so if we get this, great. This is my next target in this. This is my next target actually, right there. Really over the harmonic pattern because of the strong resistance and support here. So this is where I would feel safe taking my exit on my next long, if my next long is going to come from here. Now, if this gets invalidated, however, and we break below here, we open a clean candle below here, then this gets invalidated and I start looking for the fibs to the downside. Invalidation will be basically our famous 0.618, 706, and 786. And we start looking for confluence of why we would go into this area here. So now I've got to build a case, because right now with just this alone, that's all I got. I got nothing. I got no. You know what I didn't do? I didn't find a confluence with my EMAs. Let me real quick. Let me see if there's any EMA on any time frame that backs up my 0.50 for a back test. So give me 1 second. Oh, look at that. There it is. There it is. So the 21 EMA, we broke through it on a daily time frame. We didn't back test that. We blew through it, opened, and kept on going. And that lines up. So that's a third area of confluence. The bottom of the channel, 0.50 higher low rule, and the 21 EMA. Okay, I just wanted to see if there was anything like that. Okay, great. Now, like I mentioned before, if we invalidate it, we're going to go to our reload zone, which, again, just turning this off, can we find confluence aside from just the fib itself? Well, if you look here, I like this area here because it was major resistance. Check this out. The candle body's here, major resistance in this area here that does what? You know what? Let me remove this line here, and let me remove this line here, just so we don't muddy up the charts. It lines up very nicely with 786. That's what I mean by confluence. I like being able to find confluence. Now, we have a CME gap that has a very good probability of playing out. They get filled more often than not. So it's going to be one of those things that I'm going to now, sorry guys, I've got a lot of trades with my Telegram. You guys all know that I have a paid signal channel, right? I call it a trade setup, where I give trade setups, and I put a bunch of trade setups this morning for positions that we are in, and that's when my alerts are confirming that everything's playing out. And basically that's like a cash register. Cha-ching, cha-ching, cha-ching. So I apologize for those noises. I lost my train of thought. Give me 1 second. I was talking. Oh, the CME gap. So let's take a look at the CME gap and see if we can find where that next gap is, and if we can find some sort of. There it is, right here. Let me go to the daily time frame. It just carries a little bit more weight. There it is. Look, I already have it actually marked down. See the top of this wick? That closes the CME gap at 58,805. Can we find confluence at 58,805 with our thesis? Let me see. 58 here. I'm going to put this in purple to match the other purple line. CME gap close, and that was at 58,805. Look at that. Building confluence. Now we have within that reload zone, we have a prior resistance that we broke out, and look, we never back tested. Then we have that coincides with our reload zone, that coincides with our CME gap within this zone here. Now, can we find EMAs to back that up? The 21 EMA we broke out, but we did back test it. So there's no need to back test again, even though we didn't back test this. I don't see this as an area where it needs to back test, but I do like the fact that the 200 simple moving average is inside of our reload zone because we know what it's going to do, right? It's going to act high probability as support. Even though we do have other objectives here, we could get a candle body close here and a wick here to close some of these objectives. And these objectives don't have to close. Remember, guys, when we look for confluence, we look for a zone, for an area, reasons why it may come here. They don't have to hit to the dollar, to the penny. That's not how technical analysis works. You have to give yourself a margin of error. But this is a good confluence area where a lot of things are lining up. We got 1, we got 2, we got 3, we got 4 compared to 3 here. So it's not that far off, but we can make a case for either one. Reason I do that, basis of my trading system, validation and invalidation. We invalidate the continuation rule. We then turn on this rule here because I'm not going to think if we lose the continuation rule, we're going to go to 44,000. No. From the very beginning of these video series, I told you I don't look at those targets until we break so many levels to the upside that there's no reason to talk about those levels. It's just ridiculous and it's a waste of time. And look at where we're at. Look at where we're at. There was no need to get that bearish. No need at all. I'm sure we have a lot of people out there deleting a lot of posts on Twitter. All the $44,000, $48,000 calls are getting deleted yesterday, but it is what it is. So if we invalidate this, then we'll have a conversation. I'm not even going to entertain that right now because we are still up here. We're still at 63,000. We would have to go all the way and close below 58,000 to invalidate this and this. So that'd be a video for another day. So for right now, guys, you know what the plan is. One step at a time. Let's see if we can validate this continuation rule and bounce, or invalidate it, and you now know what the next step is. That's all we need to know for today. As a day trader, that's all you need to focus on today. Intraday trading. Like I told you before, I'm not a swing trader. I'm an intraday trader. If you have not signed up for my $25 a month trade setup, how can you not? I've been posting the success of my members in there, what they've done, and you're talking about a month worth, $25 for 30 days of trade setups. How can you not? Give it a try. If I'm full of shit, I keep on telling you guys, if I'm full of shit, post it, tag me, and I will give you my word. I will repost it. I give you my word, I will repost it. You know why I would repost it? Because when I repost it, I'm going to do a call out to my other members and say, hey, is this true? Or is just one person saying this? Does he have merit? And then you guys can judge me based on that. All right, guys, everyone have a really good day. I went a little bit over my time. I'm trying to keep these as close to 15 minutes as possible. So I went over about 3 minutes off my time. I'm going on vacation again. I leave today. I'm going to bring my stuff with me. Give you guys some quick BTC updates, but at least you have a plan for today. And everyone have a good day.